Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim, and happy Thanksgiving.
Happy. The Canadian Mortgage and Housing Corporation made the news this week after a Freedom of Information request is made public about Canada's housing markets. The report detailed what CMHC called the puzzling dynamics of the Toronto market, and CMHC suggested factors other than demand were driving prices higher, leaving Prime Minister Trudeau with few options to ease the affordability crisis. Should homeowners be worried about CMHC using the word puzzling, since they're supposed to be experts?
Should they be worried about the word puzzling? Yeah, that's a great question, and actually that Freedom of Information request was an interesting one to read about. I read about that, I think, in the Star here. So I know exactly what you're referring to. I haven't seen the report, so there's never been a link provided anywhere that we could find. But when we hear words like puzzling coming from any organization when it comes to the housing market, it simply is just a comment on the overall understanding of how housing markets function and how the conversation has been so carefully controlled through myths and misrepresentations that really are rooted in organized real estate. CMHC's commentary about being puzzled, I mean, clearly that means that they are not using metrics to measure a housing market that they feel are reliable. If those metrics were reliable, then CMHC would be able to provide an answer to this puzzle, and they would explain how the pieces actually come together and the puzzle is solved. When we look at a housing market, we look at so many different metrics, Jim. It's at times it's overwhelming, only in terms of how many of the smaller metrics are added together to form an aggregate for a larger metric. So the puzzling nature that CMHC or the UBS survey from last week or the Moody's comments or the comments from your politicians about trying to solve affordability, these really are not complicated issues when you understand how a housing market functions. And when they use the word puzzling, it means they simply don't understand. Now, what your listeners need to understand is this. When I quit organized real estate, when Ross K. Realty Consultants stepped away from selling real estate to helping analyze housing market data, which ended up with the creation of the Wealthy Homeowner a few years later, CMHC was still publishing on their charts that they were referring to the resale housing price going up and down each month that was given to them by the Canadian Real Estate Association. Your listeners can simply go to the CMHC website and see now they no longer refer to that as resale housing information, and now they use a term they call the MLS sales price. The reason why the word resale has disappeared is because of our conference calls with CMHC explaining to them that these real estate associations have never measured resale prices. They measure the information that comes to them through the sales, which could be brand new homes. And as the housing market slows, that percentage of brand new homes increases. And that always skews their numbers. It creates a false market. It creates false intelligence. It becomes very puzzling to anyone looking at the market when you're looking at these statistics and assuming that they're data points or metrics when they're not. They're simply statistics. That's why CMHC is confused. That's why they can't explain what's happened in Toronto or what's happened in Vancouver. It's why they're now saying Vancouver's prices really are 75% caused by fundamentals, but in Toronto, only 60% of the house, or excuse me, 40% of the house price change is reflected in fundamentals. Yet, the average selling price of a house in Vancouver is not even closely associated with what the average house price is selling in Toronto. Toronto is way cheaper than Vancouver. It just makes no logical sense. That's why it's puzzling. It's puzzling for them. It's not puzzling us for us because we solved the puzzle.
Now, we see they're saying they're puzzling, and what should the Trudeau government do about affordability? Would it be better for the government to just stay out of it? Because ultimately, when prices get too high, it's consumers who make the decision not to buy. And that brings the prices down.
Governments should never attempt to impact a housing market through policy changes during a trading cycle. Now, I'll use this for an emphasis. The foreign buyer tax that was applied in Vancouver 2 years, like back in 2016, there was nothing wrong with the foreign buyer tax being applied. It's when you apply it is what matters. And if you apply it at the wrong time, which is what happened in Vancouver, then your housing stats take almost 2 years before you'll ever find out what the full consequence. When we tell everybody that your prices last year had fallen 28%, that's because we measure the market in a different way. We know that the tax was applied at a time in the market where it was going to take 18 months before people even realized what had taken place. Then there's another 6 to 8 months before it gets reflected in consumer behavior. The fact of the matter is that impact happened the moment the foreign buyer tax was put in place. But for over 2 years, it's going to be before people in Vancouver really understand the impact of that foreign buyer tax, and they make bad financial decisions on the largest financial investment of their life over those 2 full years. That means literally over 100,000 families are going to make a bad decision because the government brought a foreign buyer tax into the market at the wrong moment. That foreign buyer tax had to be applied either way back in 2013, and it had to be applied at a certain time during 2013, which I'm not going to state here on the show, or it should have been applied somewhere around 2017 in a certain time period this year, which again I'm not going to explain here on the show. It should never have been applied in 2016. Toronto brought their foreign buyer tax in, and it impacted the real estate statistics in a totally different way, because even though it was brought in the spring of this year, the same as the foreign buyer tax effectively was brought in the spring of 2016 in Vancouver, those two markets are functioning in 2 totally different ways, and the sales mix is totally different in the 2 different markets. If you apply an impact on the market, which is going to impact a certain segment of the market at the wrong moment in time, then the unintended consequences are consumers are fooled for a very, very long period of time, and there's a lot of financial damage that's done. And that's where Trudeau's problem is. Morneau, Trudeau, CMHC, the OSFI, everybody should simply wait for the correction to roll out. Let the correction happen. The correction is inevitable. The correction is unavoidable. It is going to happen. But let it roll out the way that it needs to roll out. because all you're going to do is make it worse. You're going to cause Canadian families to lose way more net wealth than was needed to be lost. And the greatest fear is you set off a panic. And if that panic gets set off, then the unintended consequences for the entire Canadian economy are probably immeasurable.
We'll have more with Ross Kay right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with Ross Kay. Ross, realtors from Vancouver to Toronto to Montreal are all suggesting jumping into each of these markets for various reasons, but the fact remains realtors are encouraging buying a home today as readily as they have been for the last 5 years. What should home buyers be thinking about those realtors making recommendations to buy?
What should they be thinking? Well, that's commission. If you don't buy a house, they don't make commission. They don't make commission, their broker doesn't get paid. They don't make commission, their mortgage doesn't get paid. They don't make commission, their car payment doesn't get paid. They could care less whether or not it was in your best interest to buy a home today. All they care about is the commission, because that's their business structure. Their business is designed around sales, not advice, not consulting. They lack the competency to earn revenue by consulting or advising. They rely upon commission sales. The entire industry is built on it. You will find across Canada this fall the exact same crazy comments being regurgitated by organized real estate as have been regurgitated for the last 30 years. In Toronto, it's a great time to buy this fall because the market has slowed down. Okay, so the market has slowed down. Arguably, they're saying prices have corrected almost $200,000 since April, but it's a good time to buy a house. Let's see. What other industry do you go out and tell somebody, let's buy this stock today because tomorrow that stock is going to be worth less? That doesn't happen. It only happens with the single biggest asset class in Canada, your house. In Montreal, they're saying about 5% house price gain. People, the province of Quebec has averaged 5% house price gain for the last 25 years. That's what the annual price has gone up in the entire province of Quebec. Who cares about a 5% house price gain being bragged about in Montreal? It's craziness. In Vancouver, you have a cycle. You're into your trading cycle in Vancouver where you can't sell a single detached luxury home in the city, but all the price pressure is on condominiums, and you have all the real estate agents and the organizations telling you that you've got to buy them now because the price is going to go up later, which defies 40 years of real estate data. We do a metric when someone's talking about buying a house, Jim. So this metric is kind of a short-term definition of what this is. Internally, we call this your ownership matrix. This matrix identifies 10 different financial calculations that are relevant if you were to buy a home today. If the matrix doesn't come up with all of the individual readings in the matrix, so there's 10 different readings in the matrix. If that matrix doesn't come up all green, like green for us means it's a good thing to buy, you shouldn't buy. If that matrix comes up red in any of those categories, you shouldn't buy. Now, things like this aren't discussed, which is why people lose tens and hundreds of thousands of dollars owning a home when they don't need to. The problem is commission real estate sales relies on a buyer buying a house. Your listeners need to understand this, Jim. The entire real estate industry in Canada is built upon convincing home buyers to buy a house today. Regardless of the marketplace, regardless of what's happening with prices, regardless of what's happening in their lives, regardless of how much financial damage or financial gain would be done, the only advice that is ever given is you should buy a house. You're told it's the best financial decision you'll make in your life. Then they rely on 40 years of ownership to make that come true. Yes, over 40 years, it will be a great financial decision. Yes, it is highly likely that you can turn your home into a financial powerhouse, unlike any other asset class in the world. I can sit here and argue with any financial advisor you can put in front of me, and I can prove with 40 years of data how you can own your home, and it's the greatest wealth building vehicle created in the history of finance. But there are so few people who treat it that way. And as a result, a lot of the financial benefits, the net wealth that is possible, never happens for the vast majority of Canadian homeowners. Don't listen to real estate agents who tell you, yes, it's a good time to buy a house. If they're going to do that, make sure that they put it in writing that they are, not only will they return the commission to you, their broker, not just the sales rep, the brokerage itself, the broker owner signs a letter of direction to you which you'll then take to your lawyer and verify that it's okay, that they will return your commission. They'll double the commission back. They will double the commission back. And don't give them 40 years for this to turn out to be true. Give them 1 year. Just 1 year. And if they won't sign that letter, which they won't, that tells you you shouldn't be listening to them. Do not get any home owning, home buying, home selling advice from a lowly, inexperienced, commission-earning sales representative. There's nothing wrong with being a sales representative. I was one for myself for 27 years, third generation of my family to be a real estate sales representative. There is nothing wrong with it. You just simply need to tell people the truth and let them make up their own decision. That is not what happens with organized real estate today. What organized real estate does today is they con everybody. They don't tell people, okay, you're going to buy this house, it's going to drop in price for the next 5 years. But the 5 years after that, it's going to more than make up for it. And over those 10 years, guess what? There's no landlord who can kick you out and tell you to move to another house. A highly skilled sales representative, as I was, because I learned from my parents, that's what you told people. You didn't lie to them. There was no need to lie to them. But what has happened today, when you've got 120,000 real estate agents across Canada, you only do less than 500,000 sales. That's not even enough money to make minimum wage when all your expenses are paid. You get what you have today. Everybody going out and say, yeah, it's a great time to buy a home.
We'll have more with Ross Kay right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, a really interesting battle building up in Cowtown. This week it was announced the attempts by the Calgary Flames to get a new arena built in Calgary had ended, with the owners of the Flames claiming the rational terms the Flames had set to get a new arena built were not accepted by the city of Calgary. At the same time, the city said the terms were not affordable to the city. Who should homeowners in Calgary believe, especially hockey fan homeowners?
Well, first of all, they should not believe the Calgary Flames or the ownership group of the Calgary Flames. Second of all, they should not believe the politicians, because the politicians are going to justify whatever decision they believe. They're going to justify it in a way that the citizens that they believe will serve their own political future. What your listeners need to understand is this. In a municipality, every single dollar that is spent or given to someone else is paid by the taxpayers, through property taxes. Now, there is a land transfer tax, which some municipalities in Canada get, which are then is then spent in the city. There is, yes, money that comes from the province or partnerships with the province or the federal government, which again is spent. But the vast majority of the budgets of every municipality in Canada are funded through property tax. That means homeowners. So the question in Calgary should have been honestly presented to the people in Calgary. We are talking about giving this company a financial benefit worth $500 million. We are going to fund that $500 million benefit for that company by asking you to pay more property taxes than would be needed. That's the way that these items need to be presented. When you're in Vancouver and the mayor is talking about building affordable housing and that it needs to be built, yes, that's true. But let's be honest with the homeowning property taxpayer in Vancouver. The property taxpayer is going to be the one who funds that affordable housing. It is not the mayor. It is not his office. It is not the city. It is the property taxpayer. Whether it's affordable housing in Vancouver or it's a new arena in Calgary, if there is a financial benefit being given to any specific citizen, that money has to come from somewhere else. Now, in Vancouver, you may be able to justify property taxes going up 10% so that you can afford to put in some affordable housing. I personally think you should instead add a consumption tax. A sales tax is a more rational way. But that being said, they're not charging you enough property taxes to rebuild your infrastructure as it is. So homeowners are not being charged enough. As a result, we have a large amount of government debt being accumulated. In Calgary, what they were trying to do was, if my reading is correct of the situation, the owners of the Calgary Flames were trying to negotiate a deal where not only were they going to get a tax savings, not only were they going to be able to earn more profits that went into their own pocket, they were also asking the city to allow them, the Calgary Flames owners, to become a property developer in the area where their own arena is going to be built. Like, it is absurd, Jim, that this discussion would even take place. I can tell you, any major sport outside of the CFL is a little bit more challenging, any of the other professional sports in Canada. I can take the real estate holdings required for those sporting teams to exist, and I can turn the cost of the sporting team into a net zero. In Calgary, what they should have done, is they should have gone ahead and said, look, we understand that when you build a stadium, you build an arena, you build a building. These buildings, or these type of things, all have a lifespan. We know that a new arena built today will be called outdated 20 years from now. We know that the owners 25 years from now will be begging for a new arena to be built. And we know 30 years from now they're going to be threatening to leave the city unless there's a new arena built because the current one doesn't allow them to make enough money. That's what's called a life cycle of a building. And in these type of buildings, which serve a purpose of entertaining the public, they're going to need to be replaced. Let the city be the one to understand that. Let the city be the one to calculate the financing strategy that works best for that building. And there is no need for the homeowner, property taxpayer, to pay a single cent. There is no need for that to be added to their property taxes. These professional sports teams can all be funded in a net zero, neutral manner, so that property taxpayers are guaranteed never to pay a single dollar of property tax, while at the same time, there is no way that professional sports team would ever want to leave the city that they profess to love.
And Ross, there's no guarantee if they build that arena for them that team will stay anyway.
That's correct.
Look at the NFL in the States where teams just leave in the middle of the night, and places they've played for decades, they disappear and leave all those disappointed fans, and they likely didn't build the arena or stadium that they perform in. That's
correct. So this is one of the main strategies that my firm recommends. So Ross K. Realty Consultants on this side, not the wealthy homeowner, Ross K. Realty Consultants. We believe in the issuing of bonds. So if this was going to take place, we would request that the city issues bonds, municipal bonds, that regular homeowners can buy up. There are benefits and there are strategies available with municipal bonds where it becomes a zero risk item, where those sports teams are technically bound to that city for the period of the bond. This is where these politicians don't understand the dynamics of real estate in 2017. Owning any kind of real estate in 2017, Jim, is not the same as it was in 2003, 1995, 1990, 1985, It is not the same thing. It is a totally different structure of financial structure attached to any real estate, whether it's your home or it's a high-rise apartment building going in downtown Vancouver that they want to rent out at affordable rents. It is a totally different market structure because of that financing component. This is where these people are so confused. They're still talking about cap rates, NOI on commercial buildings. We quit talking about cap rates when interest rates drop below 7%. It just makes no logical sense.
And Ross, to wrap up our show, some quick thoughts here. This week, the Terranet National Bank House Price Index will release their September readings. And then on Friday, the Canadian Real Estate Association will release their latest benchmark prices and home price indexes for cities across Canada. What do you think our listeners should expect from those releases? And just be honest with us,
well,
like you always are.
Yeah, you're gonna hear your aggregates have all dropped. So the aggregates of these statistics have all dropped. So they'll say year-over-year gains are not as high as they were back in August. Because of the way these metrics work, they all repeat one another. I want your listeners to understand before we end today's talk, Jim. The average selling price in Canada from the Canadian Real Estate Association, the MLS HPI benchmark price or aggregates, the Teranet National Bank HPI or 11 city composite, they all simply repeat average selling price. They get, as we've said in the show over and over again, they give these complex 100-page documents that claim that that's not what they're doing. When you track them from their date of creation, their origination date, when they measured the first day, which they call, okay, we'll call this 100. And between now and 2017, we'll measure it. Every price that happens will be measured from this starting point. They are all exactly the same. They are within 2% of one another. Yet, the two benchmarks, MLS HPI, Teranet National Bank, they don't measure houses in Nunavut. They don't measure farmland, residential houses out in the outskirts of Kelowna. They don't measure the town of Chatham, Ontario. They don't measure Sudbury. They don't measure New Orleans, Ontario. They don't measure Trois-Rivières in Quebec. But magically, they're all over 12 years, they're within 2% of the average selling price. Over 12 years. Even right now, they're still within 2%. That's because all they do is they measure the average selling price. They're all going to drop this week, Joe.
Ross, we'll talk about it on Monday.
Okay, have a good day.
My guest has been Ross Kay. He's a home ownership consultant from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter at TalkDigitalNet. Comments for the show or for our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.